Hi friends, I'm back with one more very interesting video, and I think this is going to be my one of the favorite topic, and I think I'm going to face difficulty in terms of delivering to you all. This is very critical, or maybe say a complicated topic to be discussed. Okay, so we are going to discuss about what strategies we need to deploy based on the VIX. Right, this is very important for all the retailers, right? Majority of the retailers, I would say 99% of the retailers doesn't know what strategies needs to deploy at what VIX level. All right, right, all the successful option sellers are called as, right, IV traders. Basically they're called as IV traders, they are called as volatility traders, they are called as VIX trader, because they do not believe into all the strategies, they deploy the trade based on the VIX. So they are called as IV traders, they are called as volatility trader, because they play with volatility, they play with VIX, they play with IV. See, all these three are correlated. I'm just trying to segregate it to IV, volatility, and VIX. Okay, so one condition, friend. Okay, so this video is going to be like very advanced for those retailers who doesn't have any knowledge about the calendars, right? So but I mean, if you do not have the knowledge about the calendars, I think this would be like a very advanced level, right? So anyways, before we actually jump onto the session, I'm planning to come up with a series on calendar splits. See, I'm just planning to come up with end-to-end series on a calendar splits with all the 3 to 4 adjustments, right? As today, as promised, right? So we are discussing about this thing, VIX-based strategies. Already, I've told in my previous video, must know for all the retailers. This is must know for all the retailers. Okay, so let me get you back to the VIX, right? This is India VIX chart, right? I've divided the entire India VIX into four parts. One is like 20, 10 to 14, VIX between 10 to 14, 14 to 18, 18 to 25, and 25 to 30. Right? You will come to know what are all these four boxes, or what are all these four phases, right? See, what I mean to say is, like, whenever your India VIX stands between 10 and 14, you have to go for vega positive trades, right? We have to go for vega positive trades, right? Though the term is very complicated, to make it very simple, vega positive trades are basically, those are all debit splits, rather than we taking more credit, we end up giving more debit. So it's more of giving more debit. So how much of debit we are giving, it all depends on your VIX, right? The moment I say vega positive, we are giving more debit, right? When I say vega neutral, it is as good as, right, we are not even paying more debit, or we are not even paying too much of credit. It's like balanced actually. I'll show you all the examples. Okay, let me take you to sensible, right? All my this thing would be like very practical, right? So what is calendar, right? To make you very clear, I'm just deploying a iron counter. I think this is one of your favorite, right? Everyone knows about the iron counter. This is basically your strangle, right? This is strangle, and we are buying the edge so that it become the iron counter. This is your typical iron counter. Okay, let me get it. Today's Monday, right? I'm doing it offline. I'll get it to Friday, right? You are at the neutral, right? This is your iron counter. Simple. You have one sold position, two sold positions, you are buying the edge, so that you are making it iron counter. Now what is calendar? Don't get, right, but do not get into that confusion status. What is calendar? Calendar is as good as, rather than buying your edges of the same expiry, you will be buying the next week expiry. That's it. That's called your calendar, right? See, the moment I buy the next week edges, right, this has become my calendar. Okay, so let me show you, this has become my calendar. So let me take you back to 12th. I'll make it a typical this thing, what do you say, iron counter. I'll take it to the Greeks, right? Your VIX is minus 199, so you're shorting the vega, you want your VIX to fall down, because this is a credit strategy. But what is calendar? We want the benefit of, right, the moment I change it to 19th, check the vega, this will become positive, right? 19th, right? Even I'm converting it to 19th, so this has become vega positive. What is vega positive, right? Vega positive is, right, we need the rising VIX, not the falling VIX, we need the rising VIX, right? And right, we talk about the classic calendar, right? Let's make it as a classic calendar. I add a 16,200, I'll make it 16. I make it. I will make it 16,200. I'll match the strikes. This is for the classic calendar, right? Even I'll make this at 16,600. See the Vega. Vega is 421. See, we want VIX to go up. We want VIX to go up. If not, we will end up into loss. So Vega is 421. Even the theta is more or less balanced, right? But let me take you to the graph now. Okay. Now, see, check the range, right? You have 2%, 2%, right? See the beauty. What will happen if the the VIX keeps going up? So we are deploying the vega positive trade when the VIX is between 10 and 14. So let's say your VIX stands in 10 and you are deploying this trade. What is the goal? See, we are not discussing about any strategies. Our ultimate goal is VIX should come up. VIX should go up. Okay, you have a loss of minus 17. You have deployed the trade. You have a range of 2%, 2%. Check what will happen if I just increase the VIX to 10%. Right away you are into 4121, though your market stands where it is, because this is the beauty of rising, because rising VIX will increase this premium 2 to 3 times more than increasing this premium. You know, right? Rising VIX is friend of buyer, right? And falling VIX is friend of seller. Though the VIX is increasing, we have increased the VIX, right? But definitely even this premium will increase, right? You will end up into loss, but you got up into profit because this will increase 2 to 3 times double the speed of this sold position. This is the beauty of the rising VIX. And check the range. Initially it was 2%. Check the range, it has increased to 3.7%. This has increased double. We haven't done anything, right? Market stands where it is, but just with the increasing VIX of uh, 10%, right? Let me make it 10%, right? Your profit has increased, your trade has completely, your range has increased, it has completely become green, your range is increased, right? This is the beauty of the rising VIX. But let's say the VIX keeps falling, I'll just add a minus in front of this 10, see what happens, right? Your profit is, or else I'll do one thing, I'll get it to default mode, right? Your loss is 17 because you've deployed the trade. I'm just making it to minus 10. I'm decreasing, I'm reducing the VIX, I'm adding the minus. See friends, see the loss, 4,393. What wrong we have done? Just because the VIX has fallen like minus 10%, your entire trade has gone into red. Check the margin, check the it is not even showing the break even, right? The break even might have drastically reduced here, right? Other than the plus. So when we had the plus 10% of the rising VIX, the trade was showing green, we had a good profit. But check the trade, we have the rising falling VIX of 10%, your entire trade has changed. What happened, right? The falling VIX, though you might be in profit in this selling leg, because falling VIX will increase the premium, sorry, decrease the premium of your sell position, but the falling VIX will reduce the buy premium 2 to 3 times more than the speed of your selling. So that's where you see the loss. So hope you got the context. This is the right crux of the calendars. Basically we go for calendar spread when the VIX is between 10 to 14 and we are expecting the VIX to go up, right? We are expecting, let me show you, we are expecting the VIX to go up. All right, we expecting the VIX to go up. So we have to deploy the calendar spread here, not here, right? When the VIX is standing at 10 or 12, right? Deploy the calendar spread Vega positive so that you can take the benefit of this rising VIX. Even you can deploy your calendar spread when your VIX is at 14. At least you will be able to take the benefit of rising VIX. But once your VIX comes to 25 or 20, do not even think to deploy the calendar spreads, because VIX has the potential to fall down, right? Falling VIX will not support the buy legs because we are going vega positive. So this is where we go for the credit strategies. We will discuss, but we are discussing about the vega positive. So deploy the trade here, right? Take the full advantage of the increasing VIX. When does the VIX increase? When the market falls. So I've not even taken the example of here. So let's say I'm just increasing the VIX to 10%. Okay, I have a profit, and even if the market keeps falling, right, there is no change in my profit. Ideally they should increase your profit, because falling market will increase your VIX. And let's say if the VIX increases to 20% with just the fall of 1%, right, or 2%, check the profit. Check the, or else let's say the market has fallen for 1% and there is a huge increase in the VIX. Check the profit, check the range. Initially it was 1%, 2%, but now it is almost close to 6%, right? Two times it has increased. So what at least what we have done, just the falling, this the increasing VIX has created your trade into green, your profit has increased, your range has increased. All right, so I think I've covered about this thing. So let me take you to this one. So what will happen if your VIX stands between 14 and 18? So you have to go for vega neutral trades. Okay, what do I mean by vega neutral trades? Again, I'll take you back. This time I'll just show you with one strangle, right? Let's take a short strangle for 12th expiry. Okay, just to get the bigger range, I will take a premium of 23 or 25 or 30. One second. Okay, right, and the same, right? So what is calendar? So we have taken like 23 or 25 or 30, right? What is this? Is a naked strangle, right? What should we do? We sold for 23, 23, right? So we have to buy the edges. We have to buy the edges, right, by making the vega neutral, right? I'll show you example. Rather than telling theoretically, I'll go to 12th May, so I have to buy the edge of 19th May. I'll select the 19th May. I'll select a premium which is close to 23 or 25. Okay, I'll buy this. All right, and then I'll come to the call side. I'll do the same thing. I will buy a premium close to 23. Yeah, this will do. Right, the moment I've done this, check the Greeks, right? Your vega is 161, your theta is 130. This is like as good as neutral. You can make it to zero also. I'll just leave it to you, but for taking this example, I've made my vega neutral. See, this is what I mean to say. I've made my vega neutral. So what does the vega neutral mean, right? My trade should support the rising VIX, right? My trade should support the rising VIX. I should see good profit. But when the VIX starts falling, right, my trade should not show me huge losses the way we have seen in the vega positive. Whenever we had the falling VIX, we saw 4,000, 6,000 of loss. But vega neutral is like I need to capture the profit with the rising VIX, but just in case if the VIX starts falling, I should not get into panic situation wherein my losses should increase. I'll show you the practical example, right? This is your neutral, right? I'll take you to the payoff graph quickly. I will just see, check the range, right? 4% and 3%, 4% and 3.5%. I'm just increasing. I'll make it to Friday. Okay, so check the range, 4% and 3.4%. I'm just increasing the VIX to 10%. Straight away you are into profit. Straight away you're into profit, and check your range. It has increased. Like 4.65% and 4.31% with the rising VIX. And let's say you have 20% of rising VIX, you are into profit. Market is standing as it is. Check the range. Range has increased 5%, 5.5, 5.1. We are not doing anything. We are not even manipulating with the market. Just the increasing VIX is increasing your this legs, buying legs, right? Though even these premiums will increase, but the kind of speed this will, right, this will increase. I mean, all your losses will get manipulated because your range is increasing, your payoff graph has become green, your profit is very good. Now you know, right? The moment I add minus 20 to this thing, right, straight away you are into loss. But check, friends, you are not into that huge loss, right? The way I've shown you the example of vega positive, that's the beauty of vega neutral. So what we have done, we are making our trade neutral so that even if the VIX falls, we should not end up into loss, right? That's where we did not see huge loss, even if the VIX has fallen to 21%. Now you will get into all those adjustments. Whenever your view is going wrong, you have to get into adjustments. But the vega neutral has saved you from the huge losses, right? This has potential candidate for giving you the profit in the rising VIX, and even if the VIX falls, right, you'll not see huge losses, right? You can just do the adjustments. All right, so that's where what I mean to say is like vega neutral trades. So basically we go for calendars. Let me show you what do you mean by, I'll reset the IV, I'll get it to 0. All right. Check the Greeks, right? This is almost a neutral trade. We 55, right? So this will support your rising VIX, and also it will help you in not getting into huge losses if the VIX is falling. So right, friends, we go for calendars only when we have the view of calendar going up. Okay, see, whenever the calendar is 10, obviously it has to go up, right? Probability of going up is more. So whenever we have the VIX in this period, we have to go for calendars splits. You don't even think about going into iron fly. See, when you're deploying a iron fly, when the VIX is at 10, right? Right, what does the iron fly require? Right, ironfly needs I premium, right? So when VIX is between 10 and 15, you will get such a low premium, so your ironfly will become like this. You will not even get any range. Even a movement of 100 points will get into your loss on upside and downside, because calendar needs I premium. You can go for calendar when the VIX is between 18 and 25, because how does the calendar how does the ironfly, your ironfly should be like this. It should have broader range, right? Then this will absorb the gap of 200, 300, 400 points. But deploying a iron fly when the VIX is at 10 and 10 and 12, you will end up into losses for sure, right? Not, you will not get into loss, but you'll not get into good profit for sure, because the crux of the iron fly is the I premium is I range is I profit. All right, so now let's discuss. We have discussed about the vega positive, we have discussed about the vega neutral. So now let's discuss about the vega negative traits. Friends, vega negative traits is as good as going for some naked or some credit strategies, right? So we have our iron fly, all time favorite. Iron fly is a credit strategy, strangle is a credit strategy, straddle is a credit strategy, ratio spreads or credit strategy. So whenever VIX is between 18 and 25, you have to go for credit strategies. Don't even think about going for calendars over here, because calendars, see, we bought the calendar edges when the VIX was 10 and 14, so because we get, see, low VIX is low premium, right? So next to next, the calendar edges will be like very cheap here, and it will even give us the advantage when the calendar goes up, right? So premiums will increase, but there is no point of buying the calendar edge here, because this will be like very expensive, because VIX stands at 18 and 20. What does the IVIX is I premium. So I premium is like you're paying high debit, extra debit. So why should we go for calendar? So either you can go for, see, vega neutral is like at least you can take a chance, right? Even here you'll end up giving more debit, but you are making neutral vega, right? You are getting the same credit, and whatever credit you are getting in line to that, you are paying the debit, right? But here there is no point in going for the calendar, because your debit will be too expensive, that your calendar edges will be too expensive, because the VIX is at 18 and 25. So now, I mean, needless to say that, do you want me to show you the credit strategies? Because right, all the credit strategies need falling VIX. Okay, I'll clear this entire trade. I'll take a iron fly. Right, this is my credit strategy. Looking at the Greeks of the iron fly. This is my iron fly, right? Right. Go to Greeks. Check the vega. Vega shows minus. So we are shorting vega. So this trade requires the falling uh, VIX. This trade requires a falling VIX, not the rising VIX, right? So now what I'll do, I'll take it to the graph. I'll get it to today, Friday, right? We are at break even. Now I'll just increase to 10%. See, you are straight away into loss. I'll increase into 20%, because credit strategist needs falling VIX, but here, but here the VIX is increasing. So let's say I'll just put a minus. I'm just trying to reduce the getting the VIX down. See, straight away you will get into profit, because your credit strategist. What does your credit strategist require? Credit strategist requires falling this. See the profit, right? The moment I remove this minus symbol, you are into loss of 500. But when the VIX falls for like 20%, see the profit. See the profit, you are getting 6,207. We have not done any changes. We have not even manipulated the market. Just the decreasing VIX has gotten you to this profit, right? Obviously there will be like moment, right, when I go for like downside, right? See, 1% downside, your profit will in line to the market, right? If it keeps increasing, right, the way, even your this thing, what do you say, your profit will start increasing or decreasing. If I'll take the market to upward, right? See, this is what happens, right? This is the sensible tool, friends. This might not give you the right picture, but at least I'm able to give you the context rather than me telling you to assume market goes down, market goes up. I'm just trying to show you everything in a practical way, right? Let me take you back to this thing. So I've showed you the iron fly. Let me show you ratio spread. You know that ratio spread is also a credit strategy, right? I mean, strangle and straddle you can try at your end. Let me go to this thing, clear the try. I'll go to others. I'm just deploying a ratio spread. What is ratio spread? I have one buy and two sell. Obviously this is going to be minus vega. See, minus vega, because we have one buy and two sell legs. Any extra naked sell will be, so your vega will be like minus. And what does this trade need? This trade basically needs the falling VIX, not the rising VIX. Simple. I'll just take it to 10%, right? I'll take it to the graph. All right, I'll get it to Friday. See, 10% move, you are in loss of 3000. Up move. But the moment I make it minus, you are in profit. And if I make it 20, minus 20, you are, see, plus 20, will you 7147, because this supports the falling VIX. If I make it falling VIX of 20%, that will give you, right? uh, what happened? Reset. Okay, right. Minus 20, right? You will get into profit. Okay, and let me take you to this area, right? 25 to 30, right? So basically what I do with 25 to 30 is either it is like no trading zone, or else you can go for some risk defined credit strategies. So let's say, just assume when the market is 25, the VIX stands between 25 and 30, right? You know, right, you will get huge premiums, you'll get huge premiums, right? So you can play intraday, right, by taking a risk, or else you can play, see, let's say if you're on Tuesday, right, VIX stands at 25 to 30, you'll get very good premium. So you can go for risk defined strategies like iron fly. Even on Tuesday, when you have like 2 days to go for the expiry, even you can deploy it on Wednesday if you have only one day for expiry. Reason being, you'll get good premiums, right? You'll get good range. You can go for strangles basically. Whenever your VIX stands at 25 to 30, right, you can go for strangles. You'll get good range, even on Tuesday or on Wednesday or on the expiry day. Let's say on the expiry day your VIX is between 25 and 30, even go good, but better to go for Tuesday or Wednesday with the strangle, with the straddle, right, with your iron flies, because because VIX is standing at 25 to 30, you'll get huge premiums. So that premium will give you huge range, right? So that will give you some scope in terms of playing with the expiry. Or else, for me, it is no trading zone. Right? What will happen? See, basically what happens is like whenever the VIX stands at 30, right, if the VIX starts going up, all your credit strategies will be like failing. But if the VIX starts coming down, your credit strategies will pass. Okay, so there is one more thing called inverse calendar. I'll show you that. I never trade, but just for the practice purpose, I'll show you. uh, I will clear this trade. I'll deploy one. Uh, what do you say? Iron butterfly. Okay, sorry, iron fly. This is my iron fly. Okay, so what do? We get use whatever. Usually we get the buying edge of the next week. But now VIX is at, let's say, between this zone 25 and 30. So what I'm expecting? I'm expecting VIX to fall. So what I'll do, rather than buying the edges of the next week, I will sell the next week positions. Okay, I'll get this to Friday. I'll reset the IV. This is my original position, right? My expectation is like VIX will fall, right? Falling VIX will support now the selling, this seller. So I will get the market to 20%, minus 20%. See the beauty, right? Minus 20%. Right away, you are into 14,000 profit, because this premiums will decay in a very fast when compared to this buying edge. Because looking, I'll again get back to this thing, right? I'll get you to the Greeks. Look at the Greeks, right? This is minus 482. We are shorting the vega. We want the rising vega, sorry, falling vix. Okay, that's where with a just minus 20, right? Minus 20 vix fall will give you a profit of almost 14,000. So what will happen if I remove this minus? What if the trade goes, if your vix goes to 20%, you will end up into huge losses. Check the range and everything has got messed up with the rising vix. But the moment the vix falls, everything will look pretty good shape. Your range, right, your everything will look good. So because this is the way we need to trade the, we need to deploy the strategies based on the VIX. I think I was able to give you the context of what traits we need to deploy based on the VIX. All right. So I'll tell you a few examples. Right. It doesn't make any sense to deploy a calendar when the VIX is between 25 and 30, because you will be ending up paying huge amount for the debit, and when the VIX starts falling, right, you will have huge decay in your buying position, so you'll end up into loss. It makes absolutely sense to deploy a vega positive trade here, because we have a rising vix, right? Because of the vega positive, when the vix rises, that will rise your premiums. Rising premium is your buy position. It has a good iv rate, so that will start trending, or else the premiums will be like rising very quickly, so you will end up into good amount of profit. Okay, so it doesn't make sense for you to deploy a calendar year when the VIX is at the 25, or even if the VIX is between 18 and 25, because you will be ending up paying extra debit. See, friends, telling is very easy, but this is what majority of the successful traders do. For them, the strategy doesn't even come into matter, right? So say what they do, they check the VIX. Based on the VIX, they will deploy the trades, right? They will go for the open interest. Let's say VIX is between this, they will go for vega positive. That's it. Let's say VIX is between this phase, they'll go for vega neutral trades. Let's say VIX is between this box, they will go for vega negative. This is a very tricky zone. This is a very tricky zone. You have to be like very smart, right? You have to play like with vega neutral and credit strategy. Let's say you have deployed a iron fly. If the VIX keeps going up, you have to just cut down your trade, right? Or else you have to go for the adjustments. You know, right? Why do we have all the adjustments? So let's say you have deployed the iron fly, but the VIX is going up, so you will end up doing all the adjustments in terms of mitigating your losses. So let's say you have deployed a iron fly and the VIX is coming down, right? By doing the proper adjustments, you will increase your profit. See, adjustments are there for mitigating the loss. Adjustments are there for locking your profit and also increasing your profit in terms of shifting your legs and everything. So let's say you have deployed a vega positive trade here. Now the VIX is coming down, right? You can just exit the trade, or you end up doing some adjustments in terms of mitigating the loss. But if your trade goes up, you will get into profit. So this is what, friends, I wanted to explain you. Let me remove all these things. So see, right, let me so see, when did we saw like 30%, I mean above 30%, I mean just forget about the, hardly we had, let me take you to the weekly, right? Hardly we had like above 30, like maybe 1 month, maybe like 2 to 3 months in the entire ladder since from 2011 to, right, 2000 current year. Okay, let me show you. Right, forget about the 30, right? And see what was the highest VIX. Highest VIX was almost at 88%. So people who might have deployed the credit strategies, the inverse calendars, right, strangles, right, they might have made a lot of money because the VIX was falling. So falling VIX, what will happen? Falling, see, falling VIX will support the sellers, because falling VIX will reduce the premiums. Reducing premium is like seller will get into profit. Increasing VIX will increase the premium, so this will support the buyers. All right, this is what I was trying to convey. So you have to act as a buyer for the vega positive trades. Let me show you, right, the reason I've not covered. See, you can go for calendars, and also you can go for debit trades. Debit trades in the sense you can go for, see, we need momentum, right? We need momentum. You can go for, let me take you back to this thing, right? So let's say you have bought this P leg, right? I'll reset everything. I'll get it to Friday now. We are at 19, right? No cost. So let's say your VIX is increasing. What do we want actually? Buyer needs the increasing VIX. So let's say my VIX increased to 20, right? See the profit right away, 7,766, and I've not even manipulated. Let's say your market is falling, right? See, market fell down at 1.5%, so that will increase your VIX. See the profit. Market fallen for 1.5%, that will increase your VIX. Increasing VIX will increase your premium of the buy position drastically, so you will get into profit, right? Let me show you like decreasing. See, 2% move. So even if you're here, right, 2% of move will increase the premium. So I'll show you like example why I'm showing like 20%, 10%, right, friends? I'll show you one example, right? Check this. Okay, I'll take you to the daily. Okay, check this area, right? See this green candle, 30%. Check this area, it has moved 30%. Next day it's 16%. See, 10 to 15% are very common. 6%, right? Here it shows 15%, right? Can we check this thing, why there was 30% increase in the rising VIX on the 24th of Feb? Let me take you to the Nifty. Okay, what happened on 24th Feb? Yes, see, 24th Feb we had a, is it 24th? Yeah, we had a big fall. What did I say? Whenever your market, sorry, whenever your market falls, your VIX will increase. That's it. Check this example. We have a huge red candle here, right? In contra, inverse to that, you have a green candle here on 24th, right? This is the correlation of India VIX and the Nifty. All right, friends. So again, I wanted to reiterate, right? Again, I wanted to reiterate one more time. Let me take you to the this thing, right? Whenever, see, watch this video 2 to 3 times. This is very important for all the retailers. Vega positive trades whenever we have VIX in 10 and 14. Vega neutral, just to reiterate, Vega neutral is right. Your theta and your Vega should be neutral, right? Don't even give too much of debit, don't even take too much of credit. If you're taking a credit of, let's say, 60 points, give the debit of 60 or 70, right? The calendar. And one more thing is like, I mean, I'll cover this thing in the next video. This lets me convert, see, let me convert this to iron counter. I'll show you one example, right? So let's say I'm just converting the iron counter to what is that, calendar, right? So do you think this 100 will become 0 on 12th of May? No, right? Because this is the calendar split. So for this 109 to become 0, this will become only on 19th May, but not on the 12th May. So still we will have like 10 to 12 or maybe 10 to 15 of the points remaining for this expiry, right? Anyways, here, anyways, I'll not deviate the topic. We'll cover everything in the calendar splits in the upcoming session. So this is what, friends, right? Just watch this video one more time. And again, I'm telling, option selling is not a rocket science. If you follow the VIX based approach, you can make money easily, the way all the successful traders will make money. Because all the successful option sellers are called as IV trader, volatility trader, VIX traders. They play with volatility, they play with IV, right? Right. So friends, thank you for watching. I mean, I'm sure I was able to deliver right in a right way. Even I said it right before the start of the class, I thought this is going to be like very difficult for me to explain. So in case if I missed out anything, I'll have a follow-up session, but please watch this video 2 to 3 times and also share with your friends, right? Whoever is like new to trading. And one more thing I'll tell you, I told you, right? There are like many traders. Even I did the same mistake. I've seen few YouTubers making great amount of money with the iron flies, right? I've seen those videos. Maybe I've seen this like those videos are like 1 year back. What did I do? I was applying the same iron fly when the VIX was at 10, right? I was failing. Then I thought I was blaming that particular YouTuber, but he was right because he was deploying the iron fly when the VIX was between 18 and 20. But I do not even saw that VIX and everything straight away. I when the VIX was at 10, I started deploying the iron fly, and I started deploying the calendar somewhere here, right? And I will end up into loss. But again, I used to blame that YouTuber. Okay, he made the money with the calendar spread, but why I'm not able to make? This is the area, friends. We need to have some basic common sense. Even I have done this mistakes many times, but now I have realized. Okay, I have my plan ready with me. So, which strategy to be deployed based on the VIX? All right, friends, I'll try to come up with one more follow up session in case if I missed out. Right, thank you for watching my video, friend.